What's going on, everybody? Welcome to Money Talks with the Black Sky Group. With your host, Latrice, the Forex Queen, Will, the Stock Market Bully, and me, Anthony, the Godfather Norwood. Here to discuss all things finance when it comes to building wealth and residual income. This week's show is sponsored by Personamous Solutions. Services include credit counsel and debt settlement. For more information, go to their website, www.personamoussolutions.com. That is www.personamoussolutions.com. Spell it, be champ. How do we spell that?
That is PERSONAMEANT Solutions.
Spell it again. I don't think you got it right.
PERSONAMEANT Solutions.
Fantastic. Go check them out, everybody. So, last week, all right, quick recap. Last week, we discussed game theory and investing. We had real estate investor Brandon Hanks on the show who dropped some jewels for the real estate investors. An excellent show. If you have not heard that show, please go back and check it out. We discussed organizational structure for my entrepreneurs. Then we discussed market structure. So, Will, all right, Stock Market Bully, give her a quick recap on the game theory in the market.
All right, first and foremost, good afternoon, Black Sky Group members and any listeners. We appreciate you tuning in, and hopefully that you subscribe on Spotify, iTunes, Podcast Addict, or whatever platform you're listening to, because Black Sky Group is on pretty much all of them.
And Apple.
Whew, sorry about that.
And Google.
She's just doing it.
And iHeart.
You got iHeart too.
Okay, go.
Another one.
Yeah, another.
And if you're getting any valuable information from this, pass it on to someone, because one of the values of Black Sky Group is reach one, teach one. So if you get something from this, pass it on to the next member. Let them know that, hey, they're giving out some good information. Second, I want to introduce one more thing. We got a quote of the week, because I think a lot of times people need a little bit of motivation. This will carry you through next week. The quote of this week is, people who cling to their delusions find it difficult, if not impossible, to learn anything worth learning. People under the necessity of recreating themselves must examine everything and soak up learning the way roots soak up water. That's by James Baldwin himself. We say that because today we're going to be talking about a lot of things that you're going to have to do a little bit of research on your own, but we want you to do it. To what Chief alluded to was game theory investing. Let's get to the meat and potatoes, because I know you all were like, man, he just talked all day about this last week. Game theory is the study of strategic decision making. It brings together disparate disciplines such as math, psychology, and philosophy. The most important point of reference is that a stock is worth what the consensus thinks is worth. It's a beauty contest. You want to be able to predict what other people think that the stock is worth on the short term. Long-term dollar cost averaging is the best way. You're not going to beat the market. But in the short term, if I think Apple is worth $350, Chief thinks it's worth $350, Latrice and Jeff also does, then everybody agrees that it's worth that much. Now, do the fundamentals say that? Not really. But in game theory investing, we got to know, hey, it may not be true with fundamentals, but the price is set for what it is.
Yeah, and then talking about organizational structure, man, I went into detail about that for my entrepreneurs last week. So essentially what I talked about was how organizational structure can either make or break a company. Now, I shared my story when I first started out as an entrepreneur in my first company, where my structure was terrible and I almost folded. So go back and listen to episode 7, was it? Well, it was episode 7. Go back and listen to it and hear me break that down on organizational structure. And then we talked about the market structure for the Forex market. Forex Queen, give it to us.
Yes, we talked about how I trade naked charts based on patterns and price, looking at the structure without the use of indicators. That's right, naked charts, no indicators. So we talked about how the market moves and being able to identify the structure and the patterns and the prices to be able to get into the market effectively.
Fantastic. Hey, so on this week's show, we have a special guest in the building, Mr. Jeffrey Blackwell. He's an expert in personal and business taxes, just to name a few. But I'm gonna let him introduce himself here shortly. I ain't gonna steal his thunder, so I'm just gonna give you all that. So then we'll discuss the typical week of a Forex trader. We're gonna talk about pattern day trading. We'll also talk about branding for my entrepreneurs, and then we're gonna hit something for my advanced listeners. We're going to conclude with the Fibonacci retracements sequence in the trading world. All right. So before we get started, I ask all our listeners to come and join the Black Sky Group on Facebook. Search BSG Capital Growth on Facebook. Man, come check us out. In that group, we're giving the answers to the test. That's what we're doing. We're giving you guys answers to the test. And before we get started, I'm going to give a special shout out to Deep Freeze Productions for the production that they're putting through on a daily basis for us, man. The stuff behind the scenes that they do for this podcast is immaculate, man. Trust me, I'd rather be nowhere else than with these guys. All right, so let's get right to it. As a matter of finance, Latrice, talk to us about a typical week of a Forex trader.
So a lot of people ask me, hey, does it take, how much time is required, man? Are you trading all day? Like, how can I find the time to do this with everything else that I have going on? And that's an easy question. People think that you're in the market all week, all day. No, you're not in the market all week. Like a mentor of mine, my pastor always says, preparation is never lost time. So on Sunday, we usually prepare, analyze the market, and kind of see what potential news is going to happen and how it may affect the market, checking each time frame, top-down analysis. Monday, we setting our alerts, looking for our trade setup. Tuesdays, we're managing those positions because we're in the trades. So we're actually in the trades and on Tuesday, managing. Wednesday, we're kind of evaluating, did we get any wins, any losses? And Thursdays, we're starting to look at, hey, can I get in some more positions? And by Friday, I'm looking for a way to get out the market. I'm looking for a way to get out, manage my risk, evaluate, journal, and then relax and wait for the next following week.
Is that how you do it every week?
That's how I do it every week. You have to establish a consistency. And just as we talked about structure in the market last week, we have to structure our trading. We have to journal and make sure that we document so that we can learn from our mistakes and become better each week.
So how do you prep your trades for that week? I know for me, what I do, like nightly, I'll look in the dark pool and I look at technicals from that day. And that's how I know what I want to do for the next trading day. Like I don't do mine like weekly like you do, but mine goes daily. So how do you prepare to know what trade that you want to enter on the next trading day?
Because first of all, I focus on only certain pairs. So I don't trade everything. Right. So say I'm looking at gold. So I may look at gold on a monthly, weekly, daily time frame. So looking at the structure, my entry, I may be, a ways off from my entry. So I already know where I want to get into this market. So now it's just a waiting game. So I set my alerts or I set my pending orders and I'm waiting for the market to come to me. So I don't chase the market. That's the time freedom you have. Now I'm waiting for the market to come to me as opposed to me chasing the market.
Okay. Anything else for the weekly trading?
No, just make sure that you practice every day. And when the times that you're not trading, spend some time studying, spend some time reading a book or finding something to kind of work on that mental state, because trading is still 90% mental, only 10% skill.
And then also in the trading, any other thing you do in life, self-education. Continue to do your own due diligence. Never stop doing your own due diligence. A lot of people don't like to do that because it requires reading. Reading is free. So continue to do your own due diligence. Hey, Will, stock market bully.
That guy.
Let's talk about pattern day trading, man. Let's give us a rundown on that.
All right, so when we talk pattern day trading, first we want to talk about the pattern of the trading day. Not to be confused. Pattern day trading is a form of trading, something that you can take a hit on. Just like Latrice, a normal trading day pattern though consists of, you can look at the market and kind of predict what's going to happen. At about 9:30, the market opens unless you have a platform where you can trade pre-market. At about 9:45, you'll see the initial push of the market. The market doesn't just jump up and down all day. And as you'll see when we talk about Fibonacci, there's some ways that you can retrace in and out and see where your retracement lines are.
Right.
At about 10 o'clock, you'll see the pattern hold. So if you see a stock completely shoot up at 9:45, at about 10:15, you'll start to see it start to consolidate. Because again, the market doesn't just go up, and just like there's somebody who's saying it should go higher, there's people out there saying it should go lower. So that's when the bulls and the bears are fighting. At about 11:15, just like us, people take a break and they have to go to lunch. So you'll see the market start to quiet down. Yep. Lunchtime, you won't see much volume during that time because people are eating. Right. Yep. So at about 1:30, if the lunch hour was calm, if it was kind of calm during lunch, you'll start to see that a lot of people start to hop back in the market. So you may see, again, the bulls start to pull it down and the bears start to push that stock price up at about 1:30, at about anywhere between 1:30, 1:45. At about 2 o'clock, remember the options market, closes at 3:30. So what you'll start to see is people starting to take their wins off the table, because we know some day traders. Day traders, they don't hold those positions for long. So you see stock prices affected as they start to pull out. At about 3 o'clock, this is when those swing traders close those positions, and everybody's like, hey, the market's closed, and I got to take my wins and losses, and I have to set up my trades for the next day. So if somebody's saying you'll see a slight up or down bump on the price because either people are finishing up taking those gains or saying, hey, I want to risk on and have some more risk on the table. And then from 1600, about 4 o'clock, sorry, went military for a second.
Yeah, veterans.
My bad. From about 4 o'clock to about 4 o'clock in the morning, the future markets open up at 6 o'clock every day except Friday. And that matters because if you'll hear people saying the futures market is jumping up, and then you'll see the market react. The futures do not have to coincide with the market, but it gives you a small indication.
It's an indicator. Absolutely right.
So I'll say this for what you're talking about when you're saying the patterns and how you're trading that. Mm-hmm. For me, for and I don't know if it's true for the stock market, if you can focus in on one pair or two pair, you kind of get the idea of how that pair moves at certain times of the day. So even though, maybe 3 o'clock, some people are getting out of those trades, that at 3 o'clock, my pair is going to give me another big push. Mm-hmm. So let me just hold it until 4 o'clock because I know I'm going to get a good push in my direction. So you kind of get an idea and study that pair and find out how that pair is going to move. It's going to be completely beneficial for you.
We do some of the same things in stocks and options, and this is why it helps to have a group like the BSG, and we're already starting to see it. I cannot monitor the 500 companies in the S&P 500 along with the companies that are traded as penny stocks. But what happens is if I monitor these 5 companies, and I know somebody else that watches, you say pairs, but we watch the charts and we know good entry and exit points. Now instead of me just having my 5, I may have 50 companies that people are looking at continuously, and then they can say, hey, this is the entry point and this is the exit point. And that's kind of what that dark pool list that we look at every morning does. It's a little bit of a cheat sheet, but as we grow this group and we get more traders, we'll be able to be like, hey, Chief, what you see? Hey, Will, man, Tesla, I'm telling you, it's gonna go up to $1,200 in the next 2 weeks. This is a retracement. I'm like, that's 3,000 on Tesla. Let's go.
What's the money
That's
sign?
not a signal, okay?
No, don't do that.
No.
My bad.
What's the signal? What's the sign? What's the sign?
Bloop, bloop.
There we go. Oh, she was mad I tried to coin something else.
Yeah, she's trying to shoot you down. Hey, but here's a question for the pattern day trade, right? So if I'm on a platform,
okay,
all right, how many day trades can I do in a week?
All right. So in return for my regular plug to Robinhood and Thinkorswim, I want to add some more tools to those intermediate traders. Because if you all have been on this journey with us, you've been here for the last 8 episodes. So now we can move into slightly more advanced strategies, of which, along with Robinhood and TD Ameritrade from that phone platform, you should add TradeView, a app called Atom, an app called Tastyworks, and an app called Webull. Now this is what I'm not telling anybody to do this. I'm going to give you an insider scoop that could potentially help you. So most brokerages require you to have $2,000 to get options trading privileges.
Facts.
So potentially you could take that $2,000 and each brokerage gives you 3 pattern day trades in a 5-day period. So instead of just having 3, if I have 3 platforms, i.e. Robinhood, TD Ameritrade, and Webull, I have 9 pattern day trades that I can do. So if you're a swing trader, you can convert those into almost day trades as you're taking those gains off the book. Again, I'm not telling you to do it. I'm just saying if I had $6 grand laying around in a few platforms, I might be able to make some money on some swing trades.
Yeah. So what's the penalty for being marked as a pattern day trader?
You get your account disabled for X amount of time.
Wow.
They will stop you from trading after
will.
you get to your 3rd. Now, you can turn that off, but what will happen is the good old SEC will come after you and say, hey, guy, you don't have enough money to be day trading. We're going to suspend you from trading for a while.
Wow.
So stay under the 3.
They will come knock on your door.
Wow.
Y'all don't have that problem in the Forex market?
No, sir.
Ooh.
Oh, really?
No, sir. I have a friend that trades and he's a scalper, and I've seen him put 15.
What's a scalper?
A scalper is a person that they're pretty high risk trading, so they get in and out of the market pretty quickly. So they may be in the market for a couple minutes as opposed to 15, 20, 30 minutes. But I've seen people put up to 15, 20 positions in at one time on a pair. There's no cap.
Well, it's not a cap on the positions, but how long do you have to hold them?
I can hold my trades as long as I want to.
What else? Like, so in the equities market, say I put a trade in at 10 and I go sell it at 12. That's a day trade. There's a cap on that, so there's no cap at all.
There's no cap on, and there is no dollar amount cap. I literally had an account. I had $6 in the account. I held the trade for what now 2 weeks. It doesn't matter.
Well, that's cool though. I mean, but we're talking about like when we day trade, like buying and selling in the same day. Like if you hold it more than 24 hours, you're good to go. It doesn't matter. But for in the equities market, if you buy the same day and sell that same day, that same stock, you can get marked.
Okay, so see, that's the difference because in our market, there's no we put buy and sell positions, but we're not actually selling because we don't actually have. We're just put in a position saying that the market is going to sell or buy. So there's no restriction. I can put a buy. Nice. I can hedge it and put a buy here, sell here, the same thing, and I can do it as many times as I want to.
In a day.
In a day.
In a day.
Ooh,
okay. Yeah.
Okay.
Now, so before we move forward, guys, there is another way around pattern day trading. You put $25,000 account, you can do whatever you want to.
Yeah,
that's it. It's just 25K.
Put 25 grand of capital in there, you're good.
That's it. Hold on, let me.
Yeah, that's it.
Bloop, bloop. Gotcha.
All right. I like it. Will, you got anything else to hit us with on the pattern day traders?
That's it, guys. Just remember, on those intermediate trades, it's time to start branching out into some other platforms because, one, Robinhood is very rudimentary. I would tell you, get familiar with Webull, and the app Atom gives you some really good in-depth market analysis.
I just started Atom when you told me about it the other day. Yeah, I like it. They give you alerts and all that kind of jazz. I was like, what? Okay. Cool. All right, so moving on, man. Like I said, we got a special guest in the building today, Mr. Jeffrey Blackwell. What's up, brother, man? How you doing?
I'm doing great.
Fantastic. So, hey, man, tell the people who Jeffrey Blackwell is and what it is that you do.
Well, I am not a day trader. I'm not a pattern day trader, but I've been listening, and I'm like, I need to do something a little different. All my positions were long. All my investments are long. I got a son out there that costs me about $150 a week. I should be trading and just talking to him, teaching him how to do it. But seriously, I've been doing taxes and accounting since I went to college. I started doing taxes and accounting my first year of college. My dad was a CPA. And primarily at that time, he told me, look, you're going to go to school and you're going to major in accounting. That's just how my dad was wrapped up. He said, if I have to write a check to a university, then I'm going to be able to tell you what you're going to do. And because he was already in that field, he felt like it was practical. He said, every person that you meet is a potential tax client. And a lot of people have their own business and things like that. So he felt like it was something that would never go away. And that's what he did. So he saw. And as a testament to him, I always tell people, my dad never lied to me. Everything he told me, it came to be true. He didn't tell me everything I needed to know, but what he told me was the truth. And so that's one of the things that I try to do as a tax practitioner is to make sure that I tell my clients everything that I could possibly tell them, everything that I know. I can't tell them everything. So sometimes they come to me with questions about things, and I'm like, well, I'm going to have to research that, But as far as being gainfully employed, doing taxes is just as certain as being a mortician or something like that. Doing write-up work, which is preparing financial statements for persons that have their own business so that they can get loans or even create a situation where they have shareholders. That's something that I like being a part of. So this is the foundation.
Nice.
A lot of the stuff that I do is foundational stuff for businesses that you guys take investment positions on. I went to school. My schooling included North Carolina Central and Fayetteville State. I got all my degrees from North Carolina Central and Fayetteville State. I had a degree in accounting, I have a master's in business administration, and I have a master's in information systems because I started, of course, with the advent of the internet. And I'm old enough to say, hey, I remember when we didn't have an internet. I remember doing term papers by going to the library and going to the stacks and actually having to do real research. So when I was in college, that's when the internet became popular. So when I was getting my master's, of course, information systems now is even more popular because there's no such thing as too much information.
Yeah, absolutely.
It's just knowing what information to access. And so managing databases and doing research is one of the things that I studied in information systems. And it all is, it's all helpful in whatever area of business you're in if you know how to get information and get useful information.
Right.
And so those are the way I use my degrees. And I teach at the middle school. I teach careers and college preparedness. I teach STEM courses, engineering, and robotic stuff. Wow. So I kind of do a lot of different stuff. But I'm listening to your guys, and I'm like, wow, I'm glad you guys invited me. Because I'm Will talks fast, this guy talks fast, and she talks fast, and I'm like, oh wow, well, I'm listening and I'm getting all these ideas. And when you asked me to come and talk from a tax standpoint, and primarily we're talking about stocks and things like that, I'm thinking long position. I'm thinking long position all the time because that's kind of old school and fundamental. I'm thinking long position. When you start talking about tax breaks and all that, most of those things take place in the long position. So when I'm listening to what you guys are talking about, I'm like, wow, you got to be a little more creative.
Oh, for sure.
To address these types of
things. Don't miss those small positions in the middle.
You guys. I'm like, they gonna ask me questions. No, I got some questions.
But trust and believe, man, we got some viewer questions coming up here shortly. That's going to address all that. So here's my first question to you. What are some of the most common mistakes that you've seen in a business owner who tries to file their own taxes, right? And the second part of that question is, or other mistakes that professional tax preparers make when completing a company's taxes?
Well, there's only really one real mistake that business owners make. As they matriculate into their business, they don't know when to stop and change their business formation. Like, they may start off as a sole proprietor.
Right.
And then they get to making X amount of dollars. And I'm like, yo, you need to change your business format. You need to incorporate or do an LLC or you need to get other people involved in what you're doing. You need to spread out a little bit so that you can have exponential growth. You create, because I think that every business, and they teach us in college that you should have a going concern with your business. And that is, the going concern is that you believe your business is going to operate indefinitely.
Right.
Meaning you're going to have an exit strategy, yes, for yourself, either through succession or death, but at the same time, you want your business to live in perpetuity. So you want to set it up so that you can hand it off to either someone that has shown interest or earned their position in the company, or to your children or what have
absolutely.
you. So one mistake a lot of business owners make, and this is why a lot of businesses die with the owner, is because they do not set up a succession plan. They don't do good tax planning, and in tax planning, we're talking about when to change from an individual proprietorship to an LLC, or when to incorporate, when to involve other things. That's mainly the biggest mistake I see a lot of business owners.
That's really good.
A lot of viable businesses. I've seen a lot of viable businesses when it comes to change of leadership or formation. It tanks.
Right. So the next one would be, and you giving out some great gems,
that was
man.
really
I wish
good.
I knew all this when I first started. But I was able to.
And also, businesses not investing in their business. And I don't mean in buying desks and more chairs and more computers, but what do you do with that profit? Some people just take that profit and they spend it. And I tell people all the time, money, when they say time is money and money is time, the same thing. Whatever you can do with money, you can do with time. Whatever you can do with time, you can do with money. So you can waste it, spend it, or invest it.
Yeah.
So a lot of times people get to a point where they're earning a profit, but they don't have an investment strategy for that profit. Just like a business owner can actually set his business operation up to actually run itself, and then what does he do with his extra time? Does he go into other markets? Because business is business.
Yeah.
And any investor will tell you that. A good business is one that turns a profit.
Yeah.
You can sell ice cream or you can sell tires. If you're turning a profit, then what are you doing with that profit?
Yeah.
Some people take it and they do like anybody who wins any kind of contest, they're gonna rest on their laurels. They're gonna live in the spoils when they should have some kind of investment strategy, which doesn't necessarily mean investing in your business, but sometimes investing in your competition or your suppliers, or your competitors, your suppliers. What is it that makes your business viable that you don't touch?
And speaking of profits, right? What are some of the best practices a company can have to maximize their tax benefits off of that money made?
Well, it goes back to your structure. And a lot of time it's timing. And that's all tax is really, it is a taxation of your money and your time, really. Because your time invested in your business is what generates your income and your profit. And taxes says that, okay, then we get to take this part here. But depending on how you're structured, then I should say it depends on how the tax entity looks at you and how it looks at your money. So if you have investments and you receive dividends, let's say you're in an investment situation, you get dividends. There's dividend reinvestment plans that you can take whenever you get dividends. You don't cash it out. They don't get the taxes. You're putting it right back It's what you would do anyway, but mainly your dividend and reinvestment plans are on those stocks that, you know, are tried and true, you know, those ones. Day trading is nothing, it has nothing to do with this, but these are long position stocks. So what you do is, if you know you're going to stay in that market, if your exit strategy has not even begun yet, then you keep reinvesting those monies, and there's no taxable event when it's reinvested.
Nice.
So it really depends on how the tax entity is looking at you and your money. So if you're the type of person that's, I guess you could say, that cashes out a lot, you know. You know, and I imagine when I'm listening, I'm like, well, day traders sound like they got short positions. Of course, if you're doing it a day, so you're making money every day, and those are taxable events. I don't care how you put it. So you have to have a tax strategy for it, because you want to make money doing that, but you don't want to get ate up in taxes. So now, because it's short term, your tax rate is going to be whatever your tax rate is otherwise.
Are you looking at my computer?
Yeah, speaking of which, those are questions that we got from the viewers.
You just like
you just hit them.
Your tax position, you're going to get taxed when you have a short term position. Your tax rate is going to be your tax rate on your tax return. So your strategy might be to, well, I got to make sure that what I'm doing personally, that I reduce my taxable income to below 15%, so that my day trading or whatever you earn doing your day trading is taxed at 15%, because that's all
15%.
short term. Yeah, 15 or 10. Yeah.
Those are dimes being dropped, y'all. I mean, I'm over here just, I'm gassed right now.
I feel like he looking at my laptop right now.
He's looking at the laptop trying to answer the question. Go ahead, Latrice, hit him with some of those viewer questions.
So here's some of the viewer choice questions. I mean, you really answered some of it. So they were asking like the percentage of taxable requirement for a Forex trader, how to get those tax breaks as a day trader. Things like, is it beneficial to have your earnings in a business account like an LLC, and paying yourself and as an employee to minimize the tax risk? Like, what are some of the things that we can do to minimize those taxes and get to that 10 to 15%?
Well, if it's still going to go back to, because the day trading is going to be taxed in the short term, so it's going to be taxed at your personal tax rate. Now, if you put it in LLC, then that's still you're going to get your K1. Yep. And it's going to spill over into your tax return at your tax rate. So there's almost no way you can get away from that. The strategy then becomes managing your personal tax situation to where your taxable income gets down to 15%. So that means you're going to, well, I mean, you know, our president is making it hard for us to do this with the difference between the standard deduction and itemized. But if you itemize, and most of your expenses are in your home and your donations, you know, you're heavy on that. Because they're kind of limited how much you can really take off. Because even right now, there used to be a time where you could take unreimbursed employee expenses. So let's say that you're a school teacher, and you say, you know what, I'm not going to wait for the school to give me my stuff. I'm going to buy all this stuff.
Right.
You get to write that stuff off. But they got rid of that form for individuals. The only persons that can take unreimbursed employee expenses is the military. Period. You know, so there's a lot of things that you have to know about your personal situation, but primarily it is getting your taxable income down to 15% or lower. Now, if you can't do that, if you're making so much money otherwise, then yeah, you got your LLC, you go ahead and you incorporate so that it has its own tax.
Right, so you're separating your personal from your trading. Okay,
right. So you don't create that situation where it goes on your personal.
Right.
You got a corporation that's taxed at its rate or whatever, and
that
then you
sense.
Still
So I know for a lot of like myself and other traders in the Forex market, we have a broker, but it's international. So our international brokers still held. If we have money in those brokers' account, is that still going to be? Is it able to be taxed in the U.S.?
Well, there's a question on the tax return that asks if you have any money in foreign accounts. If you're paying foreign taxes, then you get a tax break for paying foreign taxes. As far as it being taxed, no, it's not a taxable event if you have money that's being held in foreign corporations. It's not a taxable event until you create some income and in U.S. dollars, in U.S. markets, I guess you could say.
So I put it in the Cayman Islands and then route it through Puerto Rico.
Yeah.
I mean, I don't know.
And through Bitcoin.
I don't know.
Bitcoin.
I can't tell you how to do any of that. I'm just
I
saying that if it's making,
My
I mean,
bad.
because banks do the same thing. We all know this. The
Yeah.
reason why they have a minimum balance requirement in banks is because they're taking your money and they're using it, and they get mad when you take your own money out of the bank.
Didn't we talk about it in the other episode?
There you go.
Listen, if you guys want more information about that, go check out episode 1, 2, 3, 4, 5, 6.
Yeah, because they can take your savings or your CDs or whatever investments you do through the bank. They can, or you saving money and you want to buy a house and you got $30,000 sitting in the bank.
Yeah.
And they're gonna tell you, okay, well before you take it out, you gotta go through all this paperwork. Whatever. They need to know if they're not gonna be able to use your money in those markets, especially over the weekend.
Yeah.
They're out there, they're earning 15.
Can you say
They're
confirmation?
gonna give you 3% or whatever the savings rate is, like 1%.
No.
Half a percent.
0.09%.
Okay, so that's what they're gonna give you.
Exactly.
But then they're gonna invest your money
To the
overseas.
Forex market.
In the Forex market. We
Right.
talked about that
Right,
already.
and they're gonna
Episode
get like
5, I
14%.
think.
1, 2, 3, 4, 5,
All
6,
of them.
and 7.
All the other
What are they
episodes.
earning in the Forex market?
There's
Yeah,
no
what
cap.
percentage?
Oh, it depends on. You can put whatever you want to put in.
No,
there.
I'm saying what are they earning? Like when they like, I'm just saying like.
Oh, what they're earning. I'm not sure what they're earning, and I think but it's probably between 15-20%.
That's what I said. 15%.
But-
They making 50% on the money. And this is what I always do for my tax clients. When I look at their tax return and I look at their Schedule B, their interest income, and they say, "Oh, I got this money in the bank. I got this CD, blah blah blah," and they show me, okay, so you made $200 in interest. I said, now let's go over here on your Schedule A and let's see what you paid in interest on your mortgage.
I'm so done right now.
And they're like, "Oh, I paid $9,000." Yeah, that's the interest they're charging you
Exactly.
To hold
to
your
use
money.
their money. And so I always tell people, I said, you got to start valuing your money like someone else values
Pay attention.
their money.
Exactly.
Like if you got to borrow some money from the bank, what are they going to charge you in interest?
gotta start
Then why would you let yourself? Why would you allow yourself to earn less than that? Yeah. And so what I'm listening to when you start talking about day trading and all this, I'm like, well, if you could position yourself to earn at least 1% more than what you're paying on money that you borrowed or what is in the market, the borrowing rate,
Yeah.
then you're winning.
Yeah. Because you can literally 0.09%. I can earn that in one trade, and before the trade even finished.
Right.
So, but we also, because I noticed that on the taxes now, they're asking, do you have anything in Bitcoin? So, but is that even taxable at this point, or is it just?
I think they just want to know.
They just want to know.
They still trying to.
I feel like they just want to know.
Yeah, they're still trying to figure out
How to tax
what you're doing.
So, is it okay if it's like none of your business? Since it's not taxable, like.
That person told the IRS ain't none of their business. I ain't seen them in a while.
I mean,
Right. No, if they ask and you have an answer, then it's best to give it to them. Even
Can I
though they
plead
may
the
not be
fifth?
doing anything with it right now,
Yeah.
but they are. You got to understand that your income taxes is a database.
So they're prepping for it.
They're prepping for something just in case it pops, because a lot of times, people, first Bitcoin first came out, they were like, "Oh, everybody was on it."
Yeah,
after a while,
it's not
it
gonna
kinda
last.
died down.
Yeah.
They were like, that whole curve that it has to ride, but they still want to know.
Now it's become a household name. So
has.
now it's not
Digital
taxable,
currency.
Or that
but
cryptocurrency.
they just want to know how many people are actually partaking, so
Yeah,
they can
because
decide.
once it gets to a certain point, just like anything
for
else,
sure.
just like when you're watching the market, you're looking for surges. So when the surge breaks at a certain percent or amount, that's when they're gonna also start their beachhead movement.
And we talked about that rise in Bitcoin too, actually, on episode 1, 2, 3, 4, 5, 6, and 7,
And 7.
And
7. Will, you
and
got
now 8.
Will, you got anything for Mr. Blackwell for me?
Yeah, Mr. Blackwell, I want to give a shout out to one of our loyal viewers, one of my good friends, Mr. Sam Holden. He sent me a couple questions. One of which is, what is the dollar amount when the IRS expects an what is the dollar amount the IRS expects an investor to pay in capital gains tax?
There is no dollar amount. And then again, it depends on your thing. Capital gains, of course, could be for property. It's for non-inventory items, right?
Okay.
And so it really depends on your tax bracket. It really depends on what you're doing otherwise. Your capital gains tax is going to be calculated at what your personal
And it's
tax rate.
percentage based? It's percentage based?
It's tax bracket based. Yeah, you got 10, 15.
Okay.
What's the next one? 23 or 28 and 36.
They dropped to 23. It used to be 28.
Yeah, 23, and then you got 36, and then it caps off at what, 36.999.
Somewhere in there.
Yeah.
You got to work hard to pay that much, though.
Yeah.
You got to be a good
If
person.
you're making that kind of money, you not really. I mean, you busy making that money.
You don't even care.
You don't even know.
You're going to get it right back.
The other question I had, which I got because we got some people in here that's been doing real well trading. So they're like, hey, man, I'm making a good little bit of money. What I do? They said, when should I begin investing under an LLC? I think they're trying to figure out, like, tax
Well,
bracket.
that's the structure. The LLC is really primarily a structure. So we got the structure. So an LLC is for, a group of people that primarily want to keep that group cohesive.
Okay.
So you'll find a lot of people will organize an LLC for their family members to do investing because the family member, the core group is not going to change. But in order to remove a person from an LLC, the other members have to agree. So it's real. The LLC is just really saying, okay, this is our group, and this is what we're going to do.
Okay.
And so if you want to do investing, that's fine. It's just a different structure. You're still going to have the same tax implications. Each individual is going to get a K-1, so depending. So this is what can happen. You have an investment group. All of our personal finance situations are different. You get your K-1, you get your K-1, you get your K-1, and they're all the same. And then you come back and say, man, I got hit. And I say, I got a refund. He's like, how'd you do that? What I'm really saying is I reduced my income, my taxable income lower than the amount of taxes that I paid in otherwise. And he's looking at it like, Jeff was in this investment group with me, and he's killing the tax game. How is that? And he might have way more than I have. He's killing the whole, his ownership game. He's the owner, I'm more of a loaner. So, yeah, I'm able to reduce my taxable income because I got all this other stuff going on.
Yeah, and that's what you touched on earlier. Yeah, I like that.
Yeah, nice. Mr. freaking Blackwell coming in dropping jewels. I like it, man. You know what? You got so much information. We might have to have you back here one more time.
Oh, for sure.
Absolutely.
I'm going to be back in one capacity or another.
You got him.
Like, I'm hitting you up, and I'm hitting you up. Like, so you said
I'm hitting you up first.
Hey, man. So we gotta have you back on the show. So, hey, man, we're going to transition. Let me talk to the entrepreneurs for a little bit, man. And I'm going to talk about branding this week. All right, let's talk about what is branding, all right? Brand is the unique identity of your business. It's how customers recognize your company. Essentially, your brand is your reputation. And I learned that through years of being this way, Let's be real. Building a brand takes a while. It's not something that's going to happen overnight. It's not going to take a few months, maybe not a year. Like for my company, it took me about 3 years for it to become a recognizable entity in the business world, in the fitness world. All right. So here's the thing, though. But you have to stick with it. If once you start your company, and I talk to people about this all the time, they're like, "Well, I've been doing this for 6 months and I haven't gotten anywhere." No, you got to stick with it, man. Remember, we always talk about it. Don't quit. Keep going. Never quit. All right. So if you stick with it and don't quit because your company isn't moving fast enough, man, you'll see your sales increase potentially. I'm not gonna tell you are, but you'll potentially see your sales increase. And once your brand starts to grow, then people start being an advocate for your services and your product. Like for me, I started out as a lonely little personal trainer, man. I had one client, and I got gyms. You know what I'm saying? Everywhere, and training teams across the world. You know what I'm saying? People wear my logo all the time. You know what I'm saying? Everywhere, across the world, even in the United States. But I started off as a one-man show. And how that I grew my brand was people started getting results off of what I was doing. And people matter of fact, Latrice is one of my first clients long time ago. So the word spread. You know what I'm saying? She could tell you we started out at a track, right? With 4 people. Next thing you know, we had a group of people out there and just continued to spread like wildfire. And I started expanding my brand like I talked about last episode. So go back and check episode 7. I talked about how my first expansion was to Baltimore, Maryland. Right? 1, 2, 3, 4, 5, 6, 7. Go check them out. All right. So let's talk about brand building, right? The definition of brand building is to generate awareness about your business using marketing strategies and campaigns with the goal of creating a unique and lasting image in the marketplace. All right, guys. So positive impressions plus standing out equals brand success. I'm gonna say that to y'all again. Positive impressions. That means that you're doing business the right way. You're not getting over on people. You're not treating people like a folder. You're not treating people like they're just a number. All right. and standing out. You got to be something different. Remember we talked about that agility in episode 1, 2, 3, 4, 5, 6, 7. We talked about being agility, being agile in the market. All right, whatever market you're in or industry equals brand success. So now let's talk about how do we build that brand. All right, know the purpose behind your brand. Essentially, this is your why. What is the purpose of your company? I knew what the purpose of my company was going in. It was to help people reach their fitness goals and get to a point to where they were fit, not financially, not right now. I wasn't on that kick yet, but I'm talking about physically and also mentally, all right? Next thing, research your competitor's brand in the industry. Remember I talked about that in previous episodes. What I did when I first started my company.
Like it.
What I do? I told you I went to all the local gyms, big box gyms, and I would sit there work out, but I would watch how their personal trainers treated their clients. And they would always treat their clients like they were a folder. Like they just, okay, here, give me your money, train for an hour, I'm gonna text while you're doing your exercise, and then you leave. Nope, I didn't do that. I said, okay, how do I compete against that? And guess what? I was successful that way. All right.
I'm gonna plug you in real quick, Chief. You know, Reebok just dropped CrossFit, so they're looking
Tracking
for
off.
another one. So I ain't gonna tell you to do it. I'm just saying if you decide,
Okay.
I might know somebody who want to invest.
I'm gonna send them an email. The next thing, determine your target audience, right? You have to know your target audience. That's one thing you have to know. You can't be everything to everyone. And the reason I say that is we had a guy leave the BSG group the other day and say, oh, this group ain't for me. It ain't for everybody. Everything you're doing as a business is not gonna be for everybody. So understand and know your target audience. So once you know your target audience is then, say you could tailor your mission statement and your philosophy to them to reach that target audience, all right? Next, establish a mission statement like I just said. This also fits into your why. In this statement, you'll outline your company and what your company is passionate about. My thing was spreading fitness throughout the communities because fitness was a lost art for a little while. It still is, essentially. It was a fad, but the people who need it most don't do it, all right? So now form your own unique brand voice. Your voice will depend on the mission audience, your target audience, and the industry and how you communicate with your audience and how they respond. All right, your brand voice can be professional, friendly, service-oriented, or authoritative, technical, promotional, conversational, or informative. All right. So for us as BSG, we have an informative voice, conversational voice. We have all of these. All right, because we know our target audience. We want to have a conversation, but also being informative at the same time. But in the fitness world where I was at, it was all about being technical and professional, right? I had to be technical. I had to know the movements. I had to understand what a compound movement was when in the body, right? I had to understand nutrition, so I had to be technical as well. But I'm gonna tell y'all one of the most recognizable brand voices is Mr. C.T. Fletcher of Iron Ads. Big shout out to Mr. Big C.T. Fletcher, man. That's my man. All right. So his voice, he has a brand voice. When you see C.T. Fletcher on YouTube, wherever you see him, that's who he is. He didn't change it. That's who he is. And that's what I'm talking about, a brand voice. He's one of the guys I look at as like, that is a brand voice, Mr. C.T. Fletcher. Shout out, big homie. All right. Now, and here's something that Mr. Vic Frost, the owner of Deep Freeze Productions.
Super producer.
Vic Frost.
Super producer. He always beat this. So we have production meetings every morning, right? He beat this into us all the time. Integrate your brand in every aspect of your business. The brand process never stops. Your brand needs to be visible in everything your customers see, hear, and read. He beats that into us all the time. Everything you're doing, what he calls a cross promotion. That's exactly what it is, all right? So, now that I gave y'all a little bit of nuggets from the entrepreneurial side about brand building, I gave you a little something. So I challenge you guys, and I'm gonna talk about this at the end, but I challenge you guys to go ahead and look at your process of building your brand. All right, if you're in the process of building a brand and just don't know how to get started, or you're at a sticking point, listen to what I'm telling you and go run with it and do your own due diligence on it. All right, so for my advanced people, we about to get into something real sexy. We call it the Fibonacci sequence in the trading world. Latrice, Fibonacci's, baby, and the Forex.
Fibonacci. So I'm going to talk to you like fibs don't lie. So I mean, you might think, what is that? What a fib? So we're talking about numbers. We're talking about taxes. So guess what? Fibs are mathematically derived numbers. Mm-hmm. So they're very, very simple to calculate. So a lot of people may look at it like, what is that? If you know how to add 1 + 1, you can do fibs. So it's a sequence of numbers. It starts
3, right?
with
My bad.
That starts with, you take 0, it's a sequence. So 0 plus 1 is 1. 1 plus 1 is 2. 1 plus 2 is 3. 2 plus 3 is 5. So it goes on and on and on and on. So that's how you come up with the sequence of number for Fibonacci retracements. So if we're looking at Fibonacci retracements as it relates to the foreign exchange market, we're looking at trends. We're looking at support and resistance. So Fibonacci for me establishes my support and resistance. So when you have numbers like the 61.8%, that's telling me if the market is at this point, it's a pretty weak trend unless it breaks and closes above that. So then we got your 50%, which is your mid mark. So that's okay. This trend is picking up. It's a normal trend. Then if you get all the way up to the 38.2, hey, you in a strong trend. You can pretty much bank that you're in the right direction for that trade. So also when we're looking at the Fibonacci retracement, so we're looking at uptrends and downtrends. So you have your impulse, your correction, and your continuation move, which we call the ABC. So ABC of Forex, impulse, correction, continuation. So when we're using Fibonacci retracement, and the 382 to 618 is pretty much the same number, just in the opposite. One is at the top and bottom. Depends on if you're drawing your fibs from top to bottom or from bottom to top. So when I'm looking at it, if I have a strong impulse move and that market corrects, if it corrects and breaks below that number, the 382, if I'm in an uptrend, then hey, I'm looking at maybe this market is getting ready to reverse. But if it stays above it, then I'm looking at that as a continuation. And the same thing for a downtrend. If I have a strong impulse move from X to A and that market corrects, and if it stays below that 618, then hey, I'm good. It's going to continue down. But it breaks above it, then I'm waiting for that market to come back, give me a retest, and then I'm going to take it in the opposite direction.
Yeah.
And I know it's probably sound foreign, but when you're looking in the market and you're putting your fibs, so a simple way to even draw your Fibonacci retracements on your chart is just to first identify the highest point in that market. So once you identify that high, then hey, I'm taking that market from the high, the fib, to the low of the market. Those are my lines. Your lines are already there. Your support and resistance is already there. So if I'm looking at the market coming all the way down, if it breaks below, I'm waiting for it to come back and give me a retest. So that retest is my correction, and it's also my confirmation. So we talk about confirmations. Confluence is the same thing. We're just confirming that, okay, so now I know that this market is getting ready to do this. So that's giving me that certainty that I need to get into the market. And so I know this is how, when we're talking about structuring your trades, this is how I know where I want to get into the market. So this is where I know I'm going to set my alert at the 618, at the 382 in the market. If I'm already in the trade and I say, okay, is this market going to continue? So when we're talking about holding trades, holding positions, instead of me jumping in and out of trades, I may hold this trade, move my stop loss and profit and trail it.
Yeah.
And that way, no matter what the market is doing, I'm at risk-free trading. And all this is just based on whether the market breaks or maintains the structure on my Fibonacci numbers.
Nice. Well, you're the same way, right?
I mean, it was so close, guys. I just want to reiterate one of the things she talked about, and one of the parts that I love the most is the confirmation of the support and resistance lines with the Fibonacci's. The reason it works the best, especially in the market like we're seeing right now, is we saw an all-time low within the last 3 months, and we're starting to see all-time highs. This matters because most companies hadn't hit those all-time highs. What that means is the Fibonacci retracements actually line up so everybody's seeing the same things. What that becomes is a self-fulfilling prophecy, because if I see the 50th percentile and it tests the 50th percentile twice, and Latrice sees the 50th percentile and it tested twice, that usually means it's confirmation that it can't break that 50th percentile and it may break down. In the same sense, if we both watch it and it shoots through that 50th percentile, that's a reason to invest. Again, pointing you back to the Black Sky group on Facebook, you can look at these things and it's listed on the trades daily. So as we move forward, you can use those as intermediate trade strategies that you can go ahead and grab some of that lunch money with. Because once you see it, you grab it, you move out of it, you do that 3 times,
Bloop, bloop.
and if you want to do it 3 more, guess what you do? You hop on that other trading platform and you do it again. Not saying you have to, just giving you a little trade strategy.
Yeah.
And speaking of that touch, we talked about that touch rule back on previous episodes 1, 2, 3, 4, 5, 6, and 7. We talked about that 2-touch confirmation. That 2-touch gives me establishes that support and resistance. That third touch is the confirmation. Fourth touch, I'm waiting for that market to break out and give me my reversal. So
nice.
Go back and listen.
So those two talked about using the Fibonacci, in their charts. I use them as well, but I use them in a different manner. I use mine in the exponential moving average.
Okay.
All right. So I use the sequence in my exponential moving average. This is just one of the tools I use to determine if I'm going to stay long or short in a position. For example, if I have a 13-day EMA, exponential moving average, EMA, if the stock price rises above that moving average, I may hold it a little longer if I haven't reached my exit point yet. So in my mind, traders, I have in my mind, I know at a certain percentage, I'm getting out. All right, I'm not just going to hold it. My number, let's just say it's 35%. Once I made 35%, I'm going. I don't care what the market's doing. Right? That's called disciplined trading. I learned that from Stephanie Cameron.
Yeah.
So
you
anyway,
don't want to get a market back the money.
Right.
Anyway.
Say it again. All right. Now, because if it reaches above that 13 EMA, the stock could potentially continue to rise. Now, if it goes below the 13 EMA day line, I will exit the position. I know I'm going. So now, if you have more than one line or EMAs on your charts like me, I use the 5, 8, 21, and the 34-day EMA. Those are the lines that I use. So if my 5-day crosses my 21 on the upside, a breakout is about to happen or it just happened. So I know that. So I'm looking at that 5-day exponential moving average, and once that line crosses over that 21, something big is about to pop, all right? So then, guess what I know? Like Will say, I'm about to make that lunch money.
I'll forget that lunch money.
Once that 5-day crosses over, I know something's coming.
The big guy hungry.
That's the lunch money and taking somebody else to get lunch.
Ain't a man. So, before we close, Mr. Blackwell, what message do you want to give to the audience, man?
Oh, listen. This is the Blue Sky Group.
The Black Sky Group. He said Blue Sky, guys. Blue.
But you don't know. That's the reason why I said that. Because a lot of my friends are airborne. They always say Blue Sky. So I'm looking at his
I'm a
shirt,
paratrooper too.
BSG. Huh?
I'm a paratrooper too.
Okay, so you don't know about that.
Yeah, but
I'm sorry.
you know, just like,
My message is listen and learn. I'm going to continue to listen, and I'm going to continue to learn.
Nice.
And I'm going to be hitting Will up a whole lot.
Yeah.
I got his number on speed down now.
Cool. I'm glad that you enjoyed your time here, man.
Yeah, I did. I really did.
Cool. So now, with that in mind, if you want to be a guest on the Money Talks podcast with the Black Sky Group, email us at blackskygroup1@gmail.com. That's blackskygroup, the number 1@gmail.com. Here are some call to actions, man. Hey, if you're thinking about it, just start, man. Do it. The time is now. Don't wait, because tomorrow may be worse than today. That's right. So you might as well go ahead and start it right now. All right. Also, start your branding process like I already told you, man. And hopefully, the information I gave you today and we discussed here today will continue to help you down your path. All right. Also, understand your why. And I'm going to continue to say this to everybody. Understand your why. In life and in business and in the stock market, whatever you're doing, man, understand your why and become obsessed with it. And for my traders out there, man, take all the information discussed today on the show and use it as a part of your trading strategies. All right, today's show was sponsored by Personam Solutions. Services include credit counseling and debt settlement. For more information, go to their website, www.personamsolutions.com. That is www.personamsolutions.com. Kindergarten Speller Bee Champ.
Yay.
Go ahead and spell it out for us.
That's Personam Solutions, PERSONAMEANT Solutions.com.
All right. On that note, man, that's all the time we have. Tune in next week when we continue the conversation about how we get started and anything you want to do. And for our advanced audience, we'll discuss what's hot in the markets and economy. And entrepreneurs, we're going to keep bringing this thing out, all right? And on that note, the Godfather signing out.